Hey guys, welcome to another video. It's been a while since my last one. Don't think there's been anything crazy that I thought warranted making a video on. But today we're going to go over the WE fake acquisition PR, which was a trade from last night. And also this time I have Joseph, who helped on the VFS video. He's going to be chiming in as well. So if you haven't checked that one out, go check that one out as well. But yeah, let's get into it. So just quickly for some context. Oh, by the way, we will be going over some other trades and other examples and nuances as well. And then, towards the end is when we'll tie into the short trade from yesterday. But yeah, so just for some context, so October 31st, Wall Street Journal, they came out with an article that we would reportedly file for bankruptcy as soon as next week. And there was another Reuters article as well. I don't know if that was the same day or day after, but I just know that came out. And I think the other thing to mention is it's not a big surprise to anyone, this WeWork. I think, you've seen everyone's mentioned this before, that they're going bankrupt, blah, blah, blah. And I mean, you can just look at the chart and see that for yourself as well, right? But, it just means that the equity will end up being worthless. And yeah, Rad also had a similar situation a couple weeks prior, maybe it was in August, can't remember exactly. But the difference is that with that one, the Wall Street Journal claimed it would be within weeks, versus with WE, it would be as soon as next week, so much shorter time frame. So you can expect that the price of the stock would be a lot more depressed, and probably decline at a faster rate. But yeah, so I think Yale was another one. And the only other things is 38% short float and a 12 million float. I'll let Joe go over the first breaking news trade.
Yeah, so the other breaking news trade that we thought was a good trade is when a Wall Street Journal article came out saying that we was preparing to file for bankruptcy within a week. And like what Igor mentioned, that Yale was a really similar example. The next two slides have that rad chart and also up. And whether they're preparing or kind of planning, these tend to really hurt the doc for that day or like on that headline. So we think that that's, a really good trade. I think another important part is that, we just had a split. So, a lot of these are trading in like the pennies, but we was still even trading at $2 at the time. So I think that makes the trade a lot easier. And then, another important thing is for a trade like this, we trade on the NISA. So, whenever they do plan to, or whenever they do file for bankruptcy, they're gonna news halt. So, you're not going to be able to capture that. If this was trading on the Nasdaq, it would be a lot different. So, this is kind of the main opportunity when it comes to a company filing for bankruptcy. So, it's a good one to kind of keep in like an arsenal to trade, whether it's in extended hours or intraday.
Yep. Yeah, so now I'll go over the fake PR. So at 5:12 p.m. ish, that's when main news outlets started circulating the PR that a proposal by Cole Capital, blah blah blah. They were looking to acquire WeWork for $9 a share. And I'll just say this: this was the most obvious fake PR that I have seen in my life, maybe apart from Envos. Um, I don't think it should take anyone more than probably 30 seconds to figure out that something fishy is going on. I mean, first of all, the premium to the stock price is just ridiculous. It doesn't make sense for something that, it's worth zero, right? And I don't think you can even compare it to a situation like Yell. For example, with Yell, right? What happened is you had a fund that came in and started buying the stock versus trying to pay a ridiculous premium to it. Um, but I mean, just looking at the PR, right? Not even the third line. We have consulted with God, and kind of similar to Getty, which I'll go over soon. With these fake PRs, you seem to always get wording that seems a little fishy, and I think whenever you do get that, it's just worth doing a little bit of research. And I think if you just search up the name of this fund, you look at their website, you look at their address, right? Their address was a WeWork address. I'm pretty sure the guy behind it is a known fraudster. Just nothing really made sense. And I think the next kicker was that it actually didn't come out at 5:12. It came out at 2 p.m. or even a bit earlier. I can't remember exactly. This user posted it, and I guess just no one picked it up earlier. And yeah, and I would say if you were somehow unable to realize quickly that this was fake, I think you probably have to do a bit of reshuffling of, I don't know, maybe your trading group or how you look for news, because it was just everywhere, and I think it was impossible to miss. But yeah, so I'll go over to Getty. So Getty was a similar situation. I think it was a couple months ago in April. Also, fake acquisition PR came out, and I can't remember exactly where they said they're acquiring it, but I think you can already tell, pretty quickly that if something's trading at a decent discount, I think it was $10, it might have been like 11, but you can see quickly this was about $7, $8. You can tell something fishy is kind of going on. And with this one, it wasn't as easy to tell, but if you looked at the original PR, you could see some wording was, didn't make sense. Their spelling was incorrect. It was a bit tougher, but you could have figured out yourself. I think I did. And I think this is a good trade. But the main reason why I'm showing you these examples of these other fake ones is just look at how when they come off the highs, you can really bet against that, and the odds of it going back higher, just it seems like it never ever happens. And so you have to be fine, not getting the best prices, right? And I think by doing that, it protects yourself. It protects you from that short squeeze risk or whatever, right? Because you'll have a clear risk level. So you can see with Lucid, not a fake PR, but that rumor. You can see when that came off the highs, like it didn't even get close to testing that. And so I know a lot of people, would be, I don't know, potentially uncomfortable shorting at 14, knowing they'd have to risk at 18. But I think the way you have to look at it is that the odds of that making a new high are just so slim. And then PTPI. Oh, let me just say really quickly. So, and the other thing to keep in mind is you can expect the company to come back within 20 minutes, 30 minutes of seeing the stock price move to come out and say it's fake. Getty, for example, if I remember correctly, it was 3 or 4 days after. And the only scenario that I have or that I know of is this PTPI. I guess because it's a small cap and it did triple. They came out and news halted and said it was fake. But, don't expect a company to come out and refute it really quickly. And then, other examples of, delist examples, right? Stocks that pop up before they're going to delist, they pop up for some no reason. They have large hard failures, and it might look like shorting at 25 cents isn't a good trade, right? Because, it was at 45, like, oh, I could have been at 45. But, in our opinion, these are still great trades, and, you still have a good amount of range to the downside. Just knowing the fact that the odds of it making a new high are just super low. Yeah, and then quickly, NVOS, I think. So this one, I mean, they put the fake PR out, right? The differences, I would say, and why you have to be careful shorting any fake PR, is because I think context always plays a big role, right? So, I mean, NVOS, it was the company that put out the PR, so whether it's fake or ludicrous or not, there is some legitimacy towards it, and, it also has a cult. So, this name didn't end up round tripping like all the others, and, if you just held, short, you could have, without having like prices from like the 40s, this did end up making you high, right? You could have, potentially lost there. But yeah, so I'll pass it over to Joe to go over the next section.
Yeah, so the second trade that we thought was a really good trade for that we was the long. And I think the reason why those other examples that you were mentioned was so important is because the context matters so much. Whether the company's putting out the PR themselves, whether the company has or the stock has a type of cult following, whether there is a lot more kind of kind of just retail longs matched with like those types of sort of shorts. Like the D listings are going to have a lot less longs and like more shorts. So, an example of that is this ICU. The other day they announced a registration withdrawal of their S1, and a lot of people were swing short positioning for the offering, and they seen the amendments, etc. And you have a lot of people that are stuck to that short side. And I think the pattern that's really common on these is you get the first initial move, and sometimes that does go, but when that kind of fails to go lower and makes a secondary high, so making that like second leg, I think that's a really great trade. Those two D listings, we just seen it, and then the next slide shows top. If you remember when that stock was really in play, and the extended hours one ninth, they put out an NT10 queue, and then they had another PR saying that they are restructuring debt. And you can kind of just see how these stocks tend to add when they're really in play and when they are a lot of shorts. Oftentimes the news is a bit less relevant. But I think the important part here that why we are including it is the pattern here. So it has that first leg. It takes a lot more time than something like that I see you, but when that breaks that first initial high, you can get a really nice follow through move. So it's kind of just a very common like pattern. And then the next one is AMC, with the entire AMC and Apes situation. Igor made a video on that. One a night in the extended hours. The judge came out and said that the proposed settlement wasn't approved. And I think this is an important one to remember the time that it came out, right? There's a lot of shorts, and then in the after hours on a Friday, a bit later into the after hours, you get this type of move, and it's important to kind of know how much time this can take, and that these can go a lot further than you think, and I think these are really kind of all good comparisons in their own way to this week. Um, so the long trade, the next
Yeah, and
slide.
I'll just jump in really quickly. I think the important thing to realize, with these after hours catalysts, names that are in play and heavily shorted, is most of these bigger guys or these people that are short and swinging short, they're not going to be waiting at their desk after 4 p.m. Let alone 5:30 on Wii. So you have to be aware of that, and just know that these moves can have those second legs like we're going over and just be really more delayed than you think. It's unlikely that it's just going to have a spike and that's going to be it, right? Because as time goes on, people start realizing they'll come back to their desks. Not everyone's going to be back at their desk at the same moment. um, and for depending on the catalyst, like it can be a rush to get out, right? And that rush, since not everyone's at their desk, it can take 5, 10, 15, 20 minutes. Who knows? But
Yeah.
yeah.
Yeah, and then this is just a chart of that so the PR hits, and instantly when you just kind of briefly read the headline, and you see a company that's supposed to be going bankrupt is supposedly being majority acquired 900% above the market. I mean, all you can just try to do is take as much liquidity as you sort of can, and you can always read it after the fact. Um, and I think what the chart on the bottom left shows is that day that the Wall Street Journal put out that article, and you can just say since it's just been down and kind of just a lot of shorts, right? So I think the long makes a lot of sense, and as you can see, it's a very similar chart to some of those others. So even if that first trade, may be the fills weren't weren't great, or um maybe you like weren't there when that kind of fails to go lower, and breaks that like first high, that's a really good trade. And sort of not to mention again, but this is also, Friday in the after hours as well, right? Um, so it's kind of a sort of a delayed move. And I think, one of the first signs that I think is really interesting is that when this is getting acquired 900% above the market, but it kind of begins to stall at $1.30, that's kind of a bit of a sketchy sign. But nonetheless, I think it gives you the time to sort of read into it. And I think being, so eager to short that first move, I think is a really dangerous trade with all the other examples. And I think that's why we weren't really, in that sort of a the bot there. And then, like I just mentioned on those second legs and those other examples, when you put together the context, some of these long trades are as good, if not sometimes better than those short opportunities.
What happened there? Oops. Yeah, and really quickly, just to mention as well, I mean, you could just look at the price action. There's just not going to be many longs left in this name at this point, right? And you had that sell-off right before the close. I mean, the only longs that are going to be really left in this name are, people on Hopium, thinking, oh, what if this squeezes back to 5, 10? And so for them, to get a 30-cent pop, um, there's not a real, super big incentive, a pop right to back where it was trading, intraday. There's not a massive incentive for them to just puke it all out there, right? So I think you also get this, um, this larger percentage of especially for someone trading after as more, active shorts and longs, right? But yeah,
Yep. And
so
the thing I'll just summarize there is that kind of puts together the entire we trade going forward, right? Because as we just mentioned, there's so much context that goes behind some of these trades and how they play out. So exactly what you just mentioned, where that's kind of shows for this exact situation. There's heavily more shorts in this, and there's very similar patterns. So I just wanted to mention that.
yeah, so now we'll go over, the bigger trade, right, which was the short. And so, going off of the long that Joe was mentioning, that second leg long, what happens is you get a really nice exhaustion, into a key area. If you look at the daily, this is where it was like holding before. This is also where it was before the Wall Street Journal announcement. And I think when you get that and a failure right after, I wasn't at my desk yet. I got in a little bit later. But I think that just sets you with, similar to those other fake news names, a potential really good risk level. Like at this point now, you have somewhere where you can be like, okay, I can actually get my size and I have a risk level, so I can calculate how many shares I should be in and blah blah blah. But yeah, I mean, whenever you see a move like this, and I think if you see, you can figure out really quickly it's fake. It's just worth putting some on because like we mentioned, this stock they could be filing bankruptcy next week. We know, it's getting sold as if the equity is worth this, right? So it's just worth putting on some risk at that point versus highs. And, this gives you more, you will have more time to, be figuring out, right? Um, and, it just starts, showing, clear fail follow through, lower highs. And it's one of those trades where the more time that goes on, it becomes very unlikely for it to make new highs. And, it just works in your favor being short. So for us, we got short, I think around here. And, as time was going on, we were just slowly adding and scaling the position, knowing that we can really trust that high. And knowing there's a lot more, we can expect this to round trip, right? Just going off prior examples and, the other context behind this name. But yeah, and I think one of our buddies was very like scared to put on size, thinking of what if it squeezes, what if it does this, I don't want to lose if this makes a new high. And I think the thinking to think behind that is, how often do you actually see something like that happen? You really don't. And it's just, this is really the type of scenario where if, let's say, I was short and I had decent size and it did make a new high, that's just a loss that you have to be very glad to take because you just cannot be missing something like this, right? This is just, there is so many reasons why this is a great trade that you can really expect to fade, that if you're just overthinking it, you're going to miss a trade and you're going to be shooting yourself later. So I think it's just very important when you get a potentially massive opportunity like this, just get involved because you really can be missing it and it could turn into something really big. And you don't have to get all your risk straight away, right? You can figure it out. This stuff gives you time. It gives you reasons to keep adding and scaling in. You also do want to trade it, right? You don't want to just whack on a billion shares and risk, unless maybe you have the most confidence possible, right? But at least for us, we were, as it was working, we were scaling and as we were getting more reasons, which I'll go through now. So for me, the first like key moment to be like, oh, okay, this is really working now. It started breaking down, getting under like 180, which is where they were soaking it. And when it was just holding below, it's like, okay, I mean, the odds of it making a new high, in my opinion, at this point, it's like less than 2%. And then as it started holding lower, I was just adding. And then we have this bot in our room. So as soon as news sources as soon as the PR starting to get deleted from news sources, we were getting notified. And to us, that's just as good as the company coming out and saying that the PR is fake, right? That just gives us all the confirmation we need. And we know as time goes on, more people figure it out, blah, blah, blah. And, once people clearly figure out that it's fake, there's no reason to be long in this name. There's no reason at all. So it's just like a trade where it just starts working in your favor and it's just giving you reasons to add and add and add. Obviously, you don't want to be adding down here. The next thing we saw, Capybara, I think they put a tweet out. And so when you get like some firm commenting on it, it's worth using that to your advantage. And then, you also got that breakdown on big volume. So yeah, I thought, to us, this was a trade that made a ton of sense to put on, really good risk behind it and, just really pushing the buttons to make sure you're getting in the size that you should be on an opportunity like this. But yeah, and then I'll let Joe chime in a second. But to me as well, this leg here, very reminiscent of some other trades we've taken, and it's probably just mostly shorts covering, right? It's still up like, I don't know, 50% from where it was before, and so I think you can also be putting some back on here if you had some cover, if you want to get more size, depending on the trade you want to take. But for us, right, we're swinging this still, so we got some more shorts into here. Any
Yeah, and
points
I
you want
think
to comment on?
yeah, I think the main part that you mentioned is important. Like the context of this is so important, right? Like, just like we went over with that NVOS, like, they can really hold up, right? Even if you know the PR is fake. But when you have a company like this where, they're filing for bankruptcy any day, right? This is a PR that was not from the company, it was from somebody random, and that is also fake. And then you also know that this is a NISA name, and they can come out really at any time and halt the stock at any time, and or the company were to come out, whether it's this day or day after or whatever it may be, the news risk is like quite low. It's actually favorable for like the swing. So I think the context behind that made it so much easier because it definitely is tricky at times to be adding, seeing what Igor's mentioning. But when you have a context like this, I think that's exactly how you can get a lot of risk in this. And then I think the other part I would just mention is exactly like Igor said. When you see that it's being deleted, that's something that doesn't happen at all, right? If you remember that wall on that crazy day during all the banks, right, when that was halting a bunch down, it was getting smoked and a lot of volume, and then turns out, that was just a fake PR. It retrieves 100% of like the move during the halt, right? So it's really important to keep that in mind and not to kind of get a bit worried or think too much, like Igor said, our like buddy was like doing. And so when you see that, that's kind of like the moment where like really you should just be getting as much as you kind of can and not try to think as much about that. And we were in a similar situation to this week, probably back in March, Igor, or maybe April. And, we found ourselves overthinking, a lot when we were in a really good position that we really just had to hold. And this kind of reminded us of that position. And, even in real time on like Friday, once we seen that, that was being deleted, all we said was, just try to add really as much as you can. And this trade turned into like a great trade to like an outstanding trade once that began to happen. So that was like a big turning point for us with in this like trade.
Yep. Just quickly, this is kind of how I executed. So when I just started putting it on, and you can see I was just scaling it. But yeah, so that's pretty much it for the week. We can just quickly give a summary of it. Joe,
Yeah,
you want to do
so
this?
we think so what we think made this go into a really good opportunity to an amazing opportunity. This was a bankruptcy name running in the after hours. They do tend to fade a little bit. The context behind the short squeeze and whatnot, the PR being fake, right? And all the other examples of NVOS or Getty, and the situation with we being that it was kind of a third party PR. And you don't really get many times where the company comes out and like says it's fake, and you can kind of know what happens when more time goes on. These stocks tend to reverse over time. Um, and then the halt risk is obviously a positive. The PR also being known, right? If a company is being bought out 900% above the market, but that was announced five hours earlier. That's a pretty sharp sign that maybe something is kind of wrong here. Um, and then the second leg as kind of that long trade, that was also a really good sort of opportunity, and a good sign that maybe the top is kind of near. All those things are really good. But then again, once you have a name that has a real reason to go down, they're filing for bankruptcy any day now, and the company is worthless, and now it's confirmed, and the stock price isn't, in the pennies or it retraced the entire move, it was still up a good amount. That makes this trade, a really rare trade to sort of have in terms of the probability of this trade working in that exact moment. So we thought those two factors were some of the biggest ones that made this a tremendous trade. Um, and yeah, so we both just kind of thought this was a amazing opportunity to go over.
Yep. Don't think I have anything else to add. So if anyone has any questions or comments, just shoot me a message or just leave in the comment section, I guess. And thanks for watching.